Agrawal ji, you can start sharing.
Okay. But it is where it is.
Sir, try now.
Now it is
Yes.
okay.
Yes.
Can you see my write-up?
Yes, sir.
Okay, and okay, right. So friends, good evening. So today we will be talking about this unit 16, which is about recovery of retail loans. We are all very much conversant about retail loans, like home loans, car loans, vehicle loans, personal loans, education loans. All of us as bankers, we lend very aggressively in this retail portfolio. So how the default is redressed? If there is a default, then whether we can do rescheduling, what are the recovery processes, whether recovery through SARFAESI Act, recovery through Lok Adalat, DRTs, recovery agent, all these things we will be discussing today. And this is not only important for your coming examination on Sunday, this will be very important for you in your day-to-day working also. So friends, let us first see why retail loans. Why banks aggressively build up their retail asset portfolio? Because they are best revenue drivers. One thing. Another thing is, instead of giving loan of say 10 crore to one party, we give 10 lakh loan to several borrowers. So our portfolio is well diversified. In that case, what happens? If my portfolio is concentrated in one or few customers, in few borrowers, and if they default, then I am taking a bigger hit. But when my portfolio is well diversified, so there is a probability that only a few of them may experience some difficulty in repaying, but all others will be adhering to the repayment schedule fixed by the bank. So my risk is well diversified. So that's why these are best revenue drivers. My risk is well diversified. So we aggressively go for retail loans. Still, the retail asset portfolio of foreign banks and new generation private sector banks as percentage of total portfolio is much higher as compared to public sector banks. So meaning thereby that we in public sector banks have a large scope of improving our retail asset portfolio. So while profits are attractive, risk is diversified, but there is a risk of default. Why? Because personal loans, credit card receivables, there are no security. Normally, there is no security in a personal loan. Credit card, they are issued without any security. So they make these type of loans more vulnerable for default. Types of retail loans, we all know: housing loan, education loan, loan against mortgage of IPs, reverse mortgage loan, vehicle loan, it means car loan and two-wheeler loan, personal loan to public pensioners, loan against gold, jewelry, and coins. These are the various types of retail loans which we come across in our banking. How the monitoring of retail loans is done? The most important thing is maintenance of due date diary for monthly EMIs, periodical checking, valuation of security, and so on. So these are some measures about monitoring of retail loans. There is a holiday period or moratorium period. The repayment starts after a certain time. For example, in case of car loan, vehicle loan, the repayment can start immediately after disbursement. But if there is a house under construction or if there is an education loan, then the repayment will start only after construction is complete. In education loan, the repayment will start only after education is complete and he gets a job. So there is a moratorium period in case of retail loans. Now, types of monthly installments. Bullet payment. Here, the principal and interest is paid in single installment at the end of loan term. For example, small value gold loans. So here the payment is done in single installment. Fixed installment loan. Here the payment is made in equal monthly installments, EMI as we call them. Now you can expect a question on EMI. How EMI is calculated? This formula you should remember. EMI is X. This is equal to P, means loan amount, into R. R will be monthly rate of interest. If my loan is carrying 12% interest on per annum basis, then it will be equivalent to 1% monthly interest. So here R I will take as 0.01. Now what is this formula? You have to remember, there may be a question where they give you the loan amount, they give you the rate of interest, and they give the number of monthly installments, 60 or 84, which are fixed. So we have to calculate, then we have to calculate X. But sometimes conceptual questions are also asked. What is EMI? EMI say if this loan is P and this is repayable in N number of months, and my EMI is X amount. So at the end of first month, X will be paid, on second month X, third X, and so on. So what is the underlying concept? If I discount, I have to find the present value of all these X. So present value will be X divided by 1 plus R to the power 1 for 1 month. For second month, the X amount which is I am paying here, its present value will be X divided by 1 plus R square. This is discounting factor, 1 plus R. So this P is what is then X? EMI is that amount. EMI is that amount whose discounted values of all these N installments, if I add them, they become equal to my loan amount. So P is equal to the present value of X at first month, present value of X at second month, present value of X at nth month. So all I add up, then this becomes equal to P. And if I solve this equation, then I get X is equal to P into R, 1 plus R to power N, and so on. So you have to remember this formula for calculation purpose. And sometimes a conceptual question is asked, what is EMI? EMI is that value whose discounted value at the specified rate of interest, they aggregate to my loan amount. That is the conceptual answer. Sometimes this question is asked. We will be discussing in the last 15 minutes various numerical questions also. So first, let us complete the theory part. Default. Default is the occurrence of an event which happens due to non-payment of agreed installment. So whatever agreement was made, and if the person is unable to pay, we say that he has defaulted in paying the amount. Sometimes, EMIs are fixed. How? On the basis of prevailing rate, the loan amount, and repayment period. Three things determine my EMI. What is the loan amount? what is the repayment period, and what is the rate of interest. Now, sometimes interest rate vary during the course of loan. If, say, there is a situation where the interest rate has increased, so the borrower and the bank both have two options. They may keep the same repayment period. In that case, they will have to increase EMI. And if EMI is retained at the previous level, then they have to elongate or increase the repayment period. So when we increase the repayment period for keeping EMI at the same level, then it is called rescheduling of loan. What is rescheduling of retail loan? It is extension of repayment period beyond the earlier agreed period due to change of certain circumstances. If we increase our repayment period, this is known as rescheduling of retail loans. Rescheduling mainly happens in case of housing loans because they are long tenor loans. Now, defaults, sometimes there may be genuine reasons beyond the borrower's control, like personal setbacks, job losses, unforeseen medical expenses, business suffering setback due to new competition. So these are genuine default where the intention of borrower is not bad, but he is facing some genuine difficulty. Then this default will be a genuine default. In that case, we adopt a customer-friendly approach because the chances of recovery are there. We may reschedule the loan, we may give him certain more concessions by way of restructuring of loan, reschedulement of loan. We address genuine default by reschedulement, by restructuring. But there are cases of willful defaults where the borrower deliberately defaults with malified intention. So when willful default will be, we will say that willful default has happened. There are certain conditions. First condition is he has the capacity to pay, but he is not paying. First condition is that he has the capacity to pay, but he is not paying. Plus, what he has done, he has diverted funds, or he has siphoned off funds, or he has disposed of, removed the assets for which the loan was given. So diversion means the money is in the business, but the use has been changed. We gave loan for short-term purpose, but he is used for it long-term purposes. We gave loan for CC, he constructed an industrial shed, right? So utilization of short-term working capital funds for long-term purposes, not in conformity with terms of sanction. This is diversion. Deploying borrowed funds for purposes, activities, or creation of assets other than those for which the loan was sanctioned. I gave loan for home loan, he purchased a car. Then this is also a diversion. Transferring borrowed funds to subsidiaries or group companies. Routing of funds through any other bank other than the lender bank. Investment.
What is siphoned in
Pardon
the C?
me?
C.
C is transferring borrowed funds to subsidiaries or group companies or other corporates by whatever modality.
Oh, okay.
He has floated one company here.
No, sir. No, sir. In you siphoning of funds.
Siphoning, I am coming. Just wait.
Oh, okay.
In diversion, the money remains in the business, but the purpose is different. The purpose for which we gave loan, that is not the purpose. He has diverted it. The money remains in the business. In siphoning, the money is withdrawn from the business. Now, siphoning means Siphoning of funds should be constituted to occur if any funds borrowed from the banks or FIs are utilized for purposes unrelated to the operations of the borrower. Now, what are the examples? The example is we gave loan for, say, whatever purpose, car loan, home loan, or CC advance or term loan, but he has used in the marriage of his children or in medical treatment of someone. So this money has been withdrawn from the business. In diversion, the money remains in the business, but the purpose is different. So this, and not depositing sale proceeds and receivables in the account are instances of siphoning of funds. If we have given advance for cash credit advance against security of stocks and book debts, and if he sells the goods, he sells the stocks, and he does not deposit sale proceed in my CC account, if he realizes book debts, and if he does not deposit the proceeds in my account, then this will also be termed as siphoning of funds. Now, reporting, if a willful default of rupees 25 lakh and above has happened, then we have to submit the information to 4 credit information companies. Now, questions can be asked. What is the cutoff limit? It is 25 lakh and above. What is the frequency? On monthly basis. To whom we have to report? To 4 credit information companies, CIBIL, Equifax, Experian, and Highmark. And information is to be submitted for suit filed and non-suit filed all. And once an account is declared as willful defaulter, there is a set procedure. We cannot declare an account at our own, at our whims and fancies. There is a procedure. We have to give notice. There are 2 committees, one ED level committee, one CMD level committee, and only then a person is declared as a willful defaulter in terms of RBI guidelines. But once a borrower is declared a willful defaulter, in terms of RBI guidelines, certain penal measures are there. What are these? No additional facilities are to be granted by any bank, not only the lender bank, but other banks also, to the listed willful defaulters. In addition, the same borrower will not get any additional facility. And besides that, whosoever are the promoters of companies or the proprietors or the partners or the entrepreneurs where they have committed willful default, then now there will be some period for which their name will be included in the list of willful defaulters. There may happen a situation where their name is removed from the list of willful defaulters. Then from the date of removal, next 5 years, suppose a person's name is removed from the list of willful defaulters today, 6th July 2022, then till 6th July 2027, 5 years from the date of removal. Now, all these promoters, directors, partners, proprietors, they are debarred from institutional finance, from floating new ventures. So they cannot be financed for launching new firm, new ventures, new company. Existing company, no additional facility. Okay, whatever facility they were having, no additional facility. Existing venture. New ventures also, they cannot obtain any loan till a period of 5 years has passed from the date of removal. So this is a big penalty, and this is a big deterrence. If we find a case of willful default, we must report it to the CICs, Credit Information Company, and once we report it, no new venture will be financed. No person, no bank will give them additional facility to their existing venture. Besides, legal process for recovery of dues are initiated. If there is a criminal proceedings may be initiated wherever necessary. This is a case of cheating when he disposes of his stocks and he does not deposit sale proceeds in my account. Then this is a criminal breach of trust, and criminal proceedings may also be launched. Wherever possible, the banks and FIs should adopt a proactive approach for a change of management of the willfully defaulting borrowing unit. We can also initiate steps for change of management. Now, related to default, there is a concept of special mention accounts. And there have been few changes in special mention accounts in recent past. Almost 8-9 months back, 12th November 2021, RBI circular. So SMA 0, in case of term loan, bills, etc., SMA 0 is up to 30 days. SMA 1 more than 30 days and up to 60 days. SMA 2 more than 60 days and up to 90 days. Now, prior to 12th November 2021, SMA 0 was 1 to 30 days. So if there was overdue, 1 to 30 days, it was SMA 0. 31 to 60 days, it was SMA 1. 61 to 90 days, it was SMA 2. But these have changed. Please remember, if your textbooks are old, maybe that you are having older classification. So new classification from 12th November 2021 for SMA 1, it is not 31 to 60 days. It is more than 30 days and up to 60 days. And so on. In case of running accounts, revolving credit facilities like CC, the SMA subcategories will be as follows. If outstanding balance remains continuously in excess of sanction limit or drawing power, whichever is lower, for a period of, here in CC, there is no SMA 0. SMA 1 and SMA 2 are there. And same definition, more than 30 days and up to 60 days, more than 60 days and up to 90 days. The above criteria for classifying stressed assets. As SMAs has come into force from the date of RBI circular, that is 12th November 2021. Now, some questions sometimes are asked about recovery policy. The recovery policy should contain provisions regarding notice period before taking possession. The banks, every bank has its own recovery policy. Now, RBI says that your recovery policy should contain following provisions mandatorily. Notice period before taking possession. We cannot straight away take possession. We have to first give notice of a certain period, which is as per bank's own policy. Circumstances under which notice period can be waived. The procedure for taking possession of the security. A provision regarding final chance to be given to the borrower for repayment of loan before sale auction of the property. This is other than SARFAESI Act, mind it. Sometimes we can take possession even beyond, outside SARFAESI Act. The procedure for giving repossession to the borrower, the procedure for sale auction of the property. So each bank's recovery policy should contain these provisions from A to F. Taking possession of charged property. Banks should rely only on legal remedies available under the relevant statutes while enforcement while enforcing security interest without intervention of court. So without intervention of court, we can take action under SARFAESI Act. So we can take only legal remedies. Or wherever banks have incorporated a repossession clause in the contract with the borrower, particularly in case of vehicle loan, the hypothecation agreement contains a clause that if borrower defaults in paying one installment, two or installment or three installment, then the bank will be having a right to take the vehicle in possession and sell it. So here, we need not wait for SARFAESI Act. We can act as empowered by our loan document, and we can take possession of the vehicle. And there are certain advantages in when we do not move under SARFAESI Act, because then 60 days period is not there, notice period is not there. There is no fixation of reserve price, there is no e-auction, etc. We can take possession and sell it. But we have to ensure that the repossession clause is legally valid, complies with the provisions of Indian Contract Act in letter and spirit. That we have to ensure. Now, recovery process. For genuine defaulters, the recovery process has to be gentle and professional. In case of willful defaulters, the recovery process should be strict and very professional. Now we come to SARFAESI Act and DRT. I will be discussing briefly SARFAESI Act, briefly DRT Act, and Lok Adalats also. So SARFAESI Act, this act is effective from 21st June 2002, and it extends to whole of India. These two things you should remember. This is important. Date, and it extends to whole of India. Now we come to straight away to enforcement of security interests. This SARFAESI Act has three parts, rather four parts: securitization, reconstruction of financial assets, and enforcement of security interests, as the name suggests. Securitization is conversion of illiquid assets into the securitization is into liquid security, in saleable securities, malleable, in marketable securities. Reconstruction of financial asset is when we sell our NPS to asset reconstruction companies or other banks. Enforcement of security interest, when we take possession of charged securities and we sell them to realize our dues without the intervention of court. This is our enforcement of security interest. So what are the eligibility conditions? They are given in section 13(2). The account should not be under exempted category. Limitation should be alive. Assets of adequate value should be there. And security interest must be registered with central registry. This has become imperative with effect from 24th January 2020. If my security interest is not registered with CERSAI, I cannot take SARFAESI action. Thereafter, 60 days demand notice is given, and it is to be issued by secured collector or authorized officer. Service is by hand delivery, registered post, speed post, courier, fax, or by electronic mail. The notice must give details of amount payable and the secured asset intended to be enforced. Exempted category. This is important from question point of view. There are certain categories of loans where we cannot invoke enforcement action under SARFAESI Act. What are these? A lien on any goods, money, or security. A pledge of moval. So pledge, if there is a pledge advance, I cannot take action under SARFAESI Act. Creation of any security in aircraft, vessel, this is not important. Then there was an earlier clause of conditional sale, hire purchase, that has been omitted with effect from 1st September 2016. any right of unpaid seller. These are not very important. Now, the next three clauses are important from examination point of view. Financial asset not exceeding rupees 1 lakh. This is exempted. Not exceeding 1 lakh means loans up to 1 lakh. They are exempted. If my loan, my recoverable debt as on date is 1 lakh, I cannot take SARFAESI action. If it is 1 lakh 1 rupee, I can take it. So loans up to 1 lakh, they are exempted. Security interest created in agricultural land, this is exempted. If a land is ordinarily used for the purpose of agriculture or allied activities, this is an agricultural land, it is exempted. Cases where amount due is less than 20% of the principal amount and interest due thereon, this is exempted. If I have given a loan of 10,000, interest was 2,000 so far, then 12,000. If my dues are less than 2,400, 20% of 12,000, then I cannot take SARFAESI action. Next, the section 36 says limitation. You should not remember section, but you should remember the essence of the section. So I can take measures under section 13(4), that is of taking possession and selling, only when claim is made within the period of limitation. That is, my demand notice must be served before expiry of limitation. Only then I can take measures under section 13(4), that is taking possession and selling it. Next is whenever borrower makes any reply to the notice, raises some objection, makes some representation, then it has to be replied within 15 days under the signatures of authorized officer. So for question, you have to remember 15 days. You have issued demand notice is of 60 days. The borrower sends some reply, raises some objection, whatever he does, then it is necessarily to be replied within 15 days. Then there are various measures under section 13(4) to take possession of the secured asset, to take over management of the business, to appoint manager, to manage the secured asset, to recover any money payable by third parties. This is also very important. Suppose the borrower has sold goods on credit to different persons, he has raised bills, then we as lender, we can ask those sundry debtors not to pay the money to the borrower, but to the bank. This is the fourth measure under section 13(4). Possession under SARFAESI Act. For movable asset, the possession is taken by authorized officer in presence of two witnesses who sign Panchanama. Panchanama is minutes of proceedings. Thereafter, inventory is prepared. Borrower is intimated by a notice enclosing therewith a copy of Panchanama and inventory, and then possession is complete. In case of immovable asset, what we do, Panchanama is prepared, inventory is prepared, but we deliver possession notice to the borrower. We paste this notice on the property and we publish this notice in two leading newspapers, one in vernacular, within 7 days from date of taking possession. So in case of IP, I have to do three things. I have to deliver the possession notice to the borrower. I have to paste this notice on the property, his residence, his office, his manufacturing unit. And third, I have to publish it in two newspapers. And time is also important. It is necessary as per law within 7 days from date of taking possession. So question will be like this. Demand notice is 60 days. Reply to representation by borrower 15 days. Publication of possession notice within 7 days from taking possession. Now, if we want to obtain physical possession And if the borrower does not give physical possession on his own, then we can request district magistrate or chief metropolitan magistrate in writing. This is as per provisions of section 14. Now, DM, CMM are to pass suitable orders within a period of 30 days. And for reasons beyond control, they may extend this period up to maximum 60 days after recording reasons. So this time limit was not there prior to 1st September 2016. SARFAESI Act was amended, and these amendments came into effect from 1st September 2016, where the DM and CMM, they have been given a specified time of 30 days, which they can extend up to 60 days after recording reason. So they have to ensure that the physical possession is handed over to authorized officer. Sale of assets under SARFAESI by any of the four methods: quotation, tender, public auction, private treaty. Now, e-auction is compulsory. Questions can be asked. Where the book outstanding at the time of auction is less than, no, e-auction, I can have manual auction in two cases only, when the book outstanding is less than 5 lakh, or the value of property put to auction is less than 5 lakh. If any of these two conditions is satisfied, then I can hold a manual auction. In all other cases, e-auction is compulsory. So before sale by any of the methods, I have to give a 30 days notice. So you have to remember this 30 days time also. For first sale, it is 30 days. If my sale does not materialize, if my auction fails, and I have to put the property to resale, then only 15 days notice is required. So first time sale, 30 days notice. For subsequent resales, 15 days notice. Then for if I'm selling it through auction or tender, then this sale notice is to be published in 2 papers also. One in English, one in vernacular. If I'm selling IP, then confirmation of sale is also required. Just hold on. Hello. हाँ मंगा दो. हाँ ठीक है. ओके ठीक. If more than one bank are there, it is a case of joint financing or consortium advance, then no action under section 13(4) can be taken unless agreed upon by secured creditors representing not less than 60% in value. So please remember this percentage, 60% in value. No criterion of number of banks, no. In IBC, Insolvency Bankruptcy Code, value and number both are there. But here in SARFAESI consortium advances, it is only 60% in value. If they agree, then action can be taken and it will be binding upon all the consortium, the entire consortium. The miscellaneous provisions, if borrower is aggrieved by our action under section 13(4), then he can file an application to DRT within 45 days. So where he can file? He can file in DRT, not in any other court. Now DRTs, earlier DRTs were not there in the state of Jammu Kashmir. After 2019, DRTs are also there in Jammu Kashmir. So there also they have to go to DRT. And DRT has to dispose of this application within 60 days. Period can be extended up to 4 months. And if so, if the appeal is to be filed to DRAT, then the limitation period is 30 days. So you have to remember 2 days. For going to DRT, 45 days. For filing appeal in DRT against decision of DRT, 30 days. And if borrower goes to DRT, then he has to deposit 50% of debt due, which DRT can reduce to up to 25%. So 50% to not below 25%, this due has to be deposited by the borrower, and only then he can go to DRT. Civil courts and commercial courts. Recoverable amount less than 3 lakh. Recovery suit is to be necessarily filed before the civil court in terms of CPC, Civil Procedure Code. So less than 3 lakh, only remedy is to file recovery suit in civil court. I can take surface action, but if I am filing a recovery suit and my dues are less than 3 lakh, then only I can go to civil court only. If my recoverable amount is between 3 lakh to less than 20 lakh, then I have choice. I can go to civil court or I can go to commercial court. Now, these commercial courts have been established in many districts under Commercial Courts Act 2015. So I have got option here. Between 3 lakh to less than 20 lakh, I can file suit in civil court or commercial court at my discretion. But for recoverable amount of rupees 20 lakh and above, I can file recovery suit only in DRTs. So this classification you have to remember for your examination point of view. Now let us do quickly DRTs and DRTs. These have been created under Recovery of Debts and Bankruptcy Act. Earlier name was Recovery of Dues to Banks and Financial Institutions Act. There was a long name. Now this name has been changed. Recovery of Debts and Bankruptcy Act. And Act is now applicable to Jammu Kashmir also. At present, there are 39 DRTs and 5 DRTs. This is not important. Now, DRT is headed by presiding officer, assisted by registrar and recovery officer. This is important for question. Who heads DRT? You will have to answer presiding officer. Who heads DRT? Then I have to answer chairperson. Chairperson is the head of DRT. PO is the head of DRT. Eligible account, we have already seen 20 lakh and above. Jurisdiction, since 2016, there has been a little change here. Suppose there is a branch in Mumbai and it has financed a loan in Kochi. The borrower resides in Kochi, borrower's unit is in Kochi, but the bank's branch is in Bombay. So as per earlier provision, I could file my civil suit at DRT Kochi only, or the DRT having jurisdiction over Kochi. After 2016, I can file in DRT Kochi or in DRT Mumbai, wherever I want. So amendment of 2016 allows banks to also file cases in tribunal having jurisdiction over the area of bank branch where the debt is pending. So time limit, the DRT has to complete proceedings in 2 hearings, maximum within 180 days. DRT 6 months. So you have to remember, in case of DRT, it is written in law, it is written 180 days. In DRT, it is written as maximum 6 months. Though the two things are quite similar, 6 months and 180 days. But we have to answer as per law. For DRT, it is 180 days. For DRT, it is 6 months. Appeal. If I go to DRT against the order of DRT, then period time limit is available 30 days. If borrower goes to DRT, then he has to deposit the money 50% to not less than 25%. Same provision as was in SARFAESI Act. Fees, you have to remember this. Sometimes questions are asked. DRT fees 12,000 for first 10 lakh. For each additional 1 lakh, 1,000, maximum 1.5 lakh. You have to remember. For DRT, there are 3 slabs only. For less than 10 lakh, 12,000 flat. 10 lakh to 30 lakh, 20,000. And 30 lakh and above, 30,000. So 3 slab structure is fees for DRAT, and for DRT, it is 12,000 for first 10 lakh. For each additional 1 lakh, 1,000, maximum 1.50 lakh. Powers of DRT, I am skipping it. It's not, you can read it yourself. Lok Adalat, created under Legal Services Authority Act. So DRTs, they have been created under Recovery of Debts and Bankruptcy Act. Lok Adalats, they have been created under Legal Services Authority Act. Permanent Lok Adalat, they exercise jurisdiction in respect of public utility services, transport, post, telegraph, telephone, water, electricity, etc. So you have to remember this. Permanent Lok Adalats are for public utility services. Monetary sealing of cases for Lok Adalat. If Lok Adalat is organized by civil code, then cases up to 20 lakh can be taken there. For DRT Lok Adalat, above rupees 20 lakh, I have to take the case to DRT Lok Adalat. Civil Procedure Code is applicable. They are all civil codes. Every award of Lok Adalat is deemed to be a decree of a court. Decisions are consent decree and cannot be appealed against. Because in Lok Adalat, both parties sit together and the head of Lok Adalat passes awards when there is a mutual agreement. So when there is a mutual agreement, it is type of consent decree and therefore it cannot be appealed against. If I have taken a suit filed case before a Lok Adalat and Lok Adalat has been successful in passing an award, and in that case, whatever court fees was paid by the bank for filing civil suit, it is refundable. I can file an application to the court and get my fees refunded. So the last topic is recovery agent. RBI has framed guidelines prescribing the code of conduct for recovery agents. These guidelines were framed in April 2008. So agent, who are recovery agent? Recovery agent would include agencies engaged by the bank and the agents employees of the concerned agencies. So there will be some agency and there will be some employees of that agency which will be working as recovery agent. So both agency and agent, on them, this guidelines will be applicable. Banks should have a due diligence process in place for engagement of recovery agent. We should exercise due diligence process, means there should not be any adverse prior report of dishonesty, cheating, etc. That's why we get police verification done. Banks should ensure that agents engaged by them in the recovery process carry out verification of antecedents of their employees, which may include pre-employment police verification. Banks have to also ensure that recovery agents strictly adhere to RBI guidelines on fair practices code for lenders, managing risk, and code of conduct in outsourcing of financial services of bank. These two codes have been issued by RBI. So these recovery agents have to follow these two codes. Then some codes have been issued by IBA and BCSBI. IBA has issued Model Code for Collection of Dues and Repossession of Security. This is known as CDRS code. Then BCSBI, the Banking Codes and Standards Board of India, it has issued Code of Banks Commitment to Customers. So RBI is two codes, IBA is one code, BCSBI is one code. All these four codes have to be adhered to by recovery agents. Banks should ensure that there is tape recording of the calls made by recovery agents to the customers and vice versa. banks should have a mechanism to address borrowers' grievances. Then we have to inform the details of recovery agency to the borrower. It is not like that we assign an account to a recovery agent and we do not intimate the borrower. We have to intimate that your account has been entrusted to such and such recovery agency. And in between, if we change the recovery agency, the change is also to be notified to the borrower. This is necessary as per RBI guidelines. Up-to-date details of recovery agency firms, companies, these have to be posted on bank's website. The incentives to recovery agents. The contract with the recovery agents to not induce adoption of uncivilized, unlawful, and questionable behavior or recovery process. Training, questions are asked, often questions are asked. These recovery agents, they have to complete some training that is imparted by IIBF. And IBA has a specified number of hours of training. If the educational qualification of a recovery agent is below 12th pass, then 100 hours of training he has to attend. 12th pass and above and below graduation, 70 hours. Graduation above, 50 hours. So RBI has stipulated that banks may engage new recovery agent without certification by IIBF, provided they successfully complete training within 30 to 45 days of their engagement. So we have been given this liberty or this discretion that even if he has not obtained the certificate from IIBF, we may engage him, but within 30 to 45 days, he has to obtain this certificate. He has to successfully complete this training. So friends, this completes the all the topics in unit 16. Now next 15 minutes, I take permission from VCTS that I may be permitted to extend my session by 15-20 minutes, please. Do you agree? Hello? Hello, Ajay Saab, are you there?
Yes, sir.
Yeah, please,
So we cover few questions now.
please.
These are the, sometimes these are from the questions asked in the past examination. Now, Shyam borrowed rupees 10,000 from bank at 12% per annum for 1 year. Interest is compounded monthly. Calculate EMI. So EMI is P into R into 1 plus R to the power n divided by 1 plus R to the power n minus 1. That is the formula. Now 12% per annum translates into 1% per month because EMI is being calculated. So 1% per month means 0.01, 1 by 100. So R will be 0.01. P is 10,000 and number of installments are 12 because it is loan is for 1 year. So I will take n as 12. So when I place these values, my EMI comes to rupees 887.40. Right? We should all be able to calculate EMI. Question number 2. Default in repayment in credit cards and personal loan segments is mainly due to, it can be both genuine and willful. So option C, any one of the above. That will be the correct answer. Question 3. In respect of suit filed and non-suit filed accounts of willful defaulters, what is the cutoff limit for reporting to credit information companies? 25 lakh and above. So for 25 lakh and above, we have to report cases of willful defaults to credit information companies, 4 credit information companies. So my answer will be C. Question 4. What are the major features of recovery policy? I have already discussed in detail. So all the 3 options, all of the above. So answer will be D. Terms and condition for repossession, I am leaving. This is as per earlier write-up in the write-up. Question 6. When did SARFAESI Act came into force? 21st June 2002. You have to remember this date. So answer will be C. Which of the following types of accounts are eligible for initiating action under SARFAESI Act? Now you see accounts with outstanding amount of rupees 1 lakh and above. Accounts with outstanding amount up to 1 lakh. Any account with outstanding amount of any extent, account with outstanding amount above 1 lakh. Now you see any extent you will outrightly you will exclude because it is not there. Okay. We have to eliminate the option. C can be eliminated. Now rest of the three, A, B, and D, all have this word 1 lakh. So please read carefully. B, outstanding amount up to 1 lakh, this is exempted. So B is eliminated. Now competition is between A and D. 1 lakh and above. So it means if my outstanding amount is 1 lakh, even then I can take action. No, I cannot take. Only if it is above 1 lakh, I can take the action. So A is also eliminated. I have to mark answer D. Correct answer is D. Question number 8. Which of the following loan accounts will be eligible for enforcement action under SARFAESI Act? Where the balance is up to 1 lakh, it is eliminated. No. Where the security is agricultural land, I cannot take action. Where recovery of 80% or more of due amount has already been effected, no, I cannot take this. Where the security, mortgage are hypothecated to the secured creditor and charge is registered with SARFAESI, I can take action. So the security is charged to the secured creditor and my security interest is registered in SARFAESI, only then I can take action. So answer will be D. Question 9. Which of the following accounts are eligible? Pledge, lien, no. Loan against deposit, no. Hypothecation, yes. So answer will be D. Under SARFAESI Act, demand notice, how many days? 60 days. So answer will be C. 60 days demand notice is served. If borrower makes any or raises objection, makes a representation, then reply has to be given in 15 days. So 11th question, answer will be A, 15 days. Question 12, whose assistance may be taken for taking physical possession under SARFAESI Act? DM and CMM. Inspector of Police, branch manager, recovery agent. BCD, they are wrong. So I have to take assistance of DM and CMM only. So my answer will be A. Under SARFAESI Act, possession notice is to be published in newspapers within how many days? 7 days of taking possession. So answer will be B. You have to remember this 7 days. In a consortium account, if action is to be initiated under SARFAESI Act, which of the following is correct? 60% by value. So answer will be option B. Before sale of securities, how many days notice is required? 30 days. For first time notice, it is 30 days. For resale, it is 15 days. 16. On behalf of bank, which of the following official can initiate action under SARFAESI Act? Any officer of the bank? No. Scale 4 and above? Yes, they can. C. Any officer authorized by the board or scale 2 and above? This is also wrong because scale 2 and above, it cannot be there. So correct answer is option B. Any officer authorized by the board or scale 4 and above. So this discretion has been given to the board of the bank. They can authorize even a scale 3 to 1 officer also. So my law says, SARFAESI Act says, that action can be taken by any officer authorized by the board or scale 4 and above. If you mark answer C, scale 4 and above only, your answer will be wrong. Normally, we understand that only scale 4 and above are authorized. No, it is not. Any officer authorized by the board can also take action and scale 4 and above. So I have to mark complete answer. This is option B. Question 17. If the owner of security wants to approve DRT against SURFACI action, he can go in 45 days. So answer will be option C, 45 days. This we have all, this in the write-up we have all read it, but in question shape it is again revised. If owner of the security wants to make an appeal to DRAT against order of DRT, then within 30 days, option B. When the borrower wants to appeal in DRAT against the decision of DRT, then he has to deposit 50% of debt due that can be reduced to not below 25%. All other percentages are incorrect. So answer will be option A. From which date the RDB Act, that DRT Act was implemented? This is 24th June 1993. So answer will option A. RDB Act is applicable when only my recoverable dues are 20 lakh and above. 20 lakh and more. So answer will be C. More than 110 lakh, more than 20 lakh. More than 20 lakh is wrong because it excludes 20 lakh figure. If my dues are 20 lakh, even then I can go to DRT. So correct answer is 20 lakh and more. The two things are different. Please understand this hairline difference between B and C. More than 20 lakh and 20 lakh and more. Correct answer is 20 lakh and more. DRTs are headed by presiding officer, DRAT by chairperson. So option C is the correct answer. (23, 24) you read yourself. What is the time limit for DRT to complete the process? 180 days. Option B. Here 6 months I have to ignore. Within 6 months will be incorrect answer. Within 180 days for DRT. Question 27. What is the time limit to file an appeal with DRAT? It is 30 days. So you have to remember 30 days time. And how much amount he has to deposit? 50% of the 50% with the DRAT can reduce to at least 25% of debt. So he has to, if borrower wants to go to DRAT, then he has to mandatorily deposit some amount with DRAT, which will be 50% of debt, which can be reduced to not below 25%. And time limit for DRAT to dispose of the appeal, here it is within 6 months, not within 180 days. For DRT 180 days, DRAT 6 months. Question 30. Lok Adalats are organized under Legal Services Authority Act. Other options are Lok Adalat Act. There is no act in the name of Lok Adalat Act. Arbitration and Conciliation Act, Code of Civil Procedure, all three are wrong. My correct answer is Legal Services Authority Act. Lok Adalats are organized by all district, state authorities, Supreme Court Legal Services Committee, High Court Legal Services Committee. All these three, they organize Lok Adalat. Nature of cases which may be referred to Lok Adalat. Any matter pending before any court, I can refer it to Lok Adalat. Any matter not brought before a court, falling within the jurisdiction thereof, for which the Lok Adalat is organized. It means any suit filed matter, I can take it to Lok Adalat. Non-suit filed case also I can take to Lok Adalat. So both A and B. So correct answer is C. Disputes up to how much can be settled under Lok Adalat organized by Civil Code. The monetary ceiling for Lok Adalat organized by Civil Code is 20 lakh. D. Above this, we have to go to DRT Lok Adalat. Which of the following is not correct regarding the award of Lok Adalat? So you have to see not correct. So 4 options are given. So 3 will be correct, 1 will be incorrect. So we have to pick up which 3 are correct. It is deemed to be a decree of Civil Code, correct. The court fee, if any, already paid, shall not be refunded. This is incorrect because it is refunded. Rest 2, the award is binding on all the parties. This is correct. Filing of the case with Lok Adalat does not extend limitation. This is also correct. So A, C, and D are correct. These get eliminated. The B is incorrect. So my answer is B. So friends, with this, I have discussed 34 questions, sample questions also. Mostly they are the recorded questions. Last year, multiple choice questions which have been asked in previous examination. We have covered these questions. So this is a 21-page write-up. First 14 page, you will get all the relevant information of this unit. And next 7 pages, these are the multiple choice questions. So my request, my advice to all of you is that please go through these write-up, please go through this question and prepare well for the entire syllabus. And all of you who appear in this examination, you should clear this examination, right? If you have got any question, you may ask. I am seeing some chats. There are some chats are there.
Agrawalji,
Yes.
if you can share now after the session, you share it. I will share with them today itself.
Okay, I will be sharing. So
What is balloon payment? That is one question.
So what is balloon payment? Now you see the shape of the balloon. It is thinner in the lower end, and as it goes up, its circumference increases. So it means the installments which vary over a period of time. Sometimes we fix installment, say first 2 years, lower installment is there. For next 2 years, higher installment. For next 2 years, again, still higher installment. So when my installments go on increasing with the period passage of time, this is known as balloon payment. Because when we appraise the loan, if we find that his income is going to increase over a period of time, then for such period when his income rises, we can have higher repayment. So this is balloon repayment. One clarification required apart from recovery: classification of inoperative locker period. Friends, there are some for accounts. There is a classification for inoperative accounts. For inoperative locker period, I will refer it. I will give me some time. I will clarify to you in the group. As per Master Circular, in operation of more than 7 years for break open only if rent properly collected shall be treated as operating. I will have to refer it. Right now I cannot answer. Let me find it out. Then I will certainly share with you. Please share PPT today itself. Yes, it will be shared right after the conclusion of class. Please explain NPA date calculation with one example. Now here, I doubt whether in this retail paper NPA date calculation will be there. Otherwise, in some other class, I have been dealt with calculation of NPA date in detail. I can share that 2-page clarification document to you also, if it is needed by you. NPA date calculation, I think in this unit 16, recovery of retail loan, it may not be that important. So if any other question, you can unmute yourself and you can ask. please.
Non-operative customer, not cooperative customer.
Non-cooperative borrowers. Non-cooperative borrower means if he is if he does not reply, if you are writing a letter to him seeking some information, you are making a call and he does not respond. If he thwarts your, if you want to inspect the security, he's creating hurdles in inspection of security. If you have initiated some recovery measures, then he is putting all types of obstacles in your recovery efforts. Such a borrower is treated as non-cooperative borrower.
Sir, is there any such limit of amount or something like that?
Now, here also, this cutoff limit of 25 lakh and above is holds good for reporting a borrower as non-cooperative to Reserve Bank of India.
Okay.
I'm sorry. It is they are reported to CAIIB and it is 5 crore and above.
Yes.
Non-cooperative borrower limit is 5 crore and above. And this information of non-cooperative borrower is shared with CAIIB, Central Repository of Information on Large Credits. For willful default, cutoff limit is 25 lakh. Any other question? So friends, prepare well, focus, make best use of your time. You pay attention to your time management. Try to solve as many questions as you can. Hopefully, you will be able to do all the questions. And if there may be some examinees who are missing ABM, BFM by 1 or 2 marks, then please ensure that in retail banking paper you score more marks so that your average of 3 papers, this helps you in clearing the entire examination.
Yes, thank you, Agrawal ji.